Hey guys, it's Max. Happy Saturday. All right, still having technical problems. Sorry to have to do the top 20 like this, but that's just the way it is. Hopefully the technical problems will be fixed by this time tomorrow, or for sure by Monday. Anyway, coming in number 20, and this is the short-term MaxFactor. The MaxFactor, just for those of you guys, well, first of all, happy Saturday. I'm sitting here watching ESPN. I have my Sooners jersey on. My quarterback's hurt, so we'll see. My quarterback is hurt. Had to get surgery. I think he had surgery. Anyway, all right. Coming in at number 20. Or first, I wanted to notice. Look at this, because I'm having to do it this way. We can see like lower than 20. Look at old YETH. Boy, how the mighty have fallen. That was number 1 like 2 weeks ago or something. So look what happened to it. Its NAV return is 4%, which isn't bad, with a yield of 84%, but it probably has a volatility of about 1 million at 60 vol. So, I mean, but it'll probably be back. I mean, it's a good time to buy the dip if you like that. Blocks fell a little bit this week also. I mean, Blocks is at 84% yield. 4% NAV return still is not bad for a quarter, but I like better what it was doing 2 weeks ago, a week ago, whatever. That happens. Blocks is about a 37 vol. Anyway, so let's start with the top 20. But I thought that was interesting how the mighty have fallen. And there's some other good ones on here. I had a show this week about Big Y. It's just a boring little target fund that sells covered call spreads on the top 50 stocks. So it'd be like the S&P 50 instead of the S&P 500. It's just a so it's basically big tech, because that's what's in the S&P 50. Big tech and a few banks probably, right? A few consumer, Anyway, so it's doing really well, and it's outperforming a lot of its peers and stuff. But it fell off this week also. It's down here at 27th place. But it hasn't been around a year yet. Okay, now we'll start with the list. TSMY. All right, so TSMY from Taiwan Semiconductor. That's it's a yield max fund that trades covered calls on Taiwan Semiconductor. Only a 2.8% yield, or a 51% yield with a 2.79% total return. All right. Next up. Friend of this channel, Susan, on a live stream told us about this IAUI. This is based on gold. Gold's been doing well lately, and a lot of the gold funds have been doing well also. This hasn't been around for that long. It's only been around since June. It's only paid about like 4%, but since it's only been around so far, but that annualizes to about 13%, 13.04. It was at $49, call it, 90 days ago, and it's at 52. It closed at 3 cents shy of 52. So that's a pretty nice little quarter there. 6% NAV plus 13%. You anticipate about a 13% total return for the year. Anyway, so that's a good one. Thank you, Susan, for telling us about that one. And thank you to all my people in my live streams every day. I appreciate you guys. All right, so YMAG. YMAG has been kind of a popular one lately. It only has a 2.6% NAV return, but it was hurt by the most recent pullback. It's been ranked higher, but it's a 50% yield. Then we have Aptly. Aptly has about a 6%. Or a 5.91% quarterly NAV return. You can see that over there in column G, if you guys are following along with me. And then, but in case you aren't, I'm trying to say the numbers in case somebody's just listening to this in the car or something. So Aptly has call it a 6% NAV return for the quarter and a 35% yield. Heck yeah, we'll take it. NV2 from our friends over at Rex Shares. Let's see, I'm trying not to expose too anyway. All right, NV2 from our friends over at Rex Shares. Look at this, quarterly NAV over there in column H of 8.38% with a 35% yield. So, not bad, right? Gold Eye. Look at Gold Eye. GLDI, also based on gold, as is IAUI. This one has about a 5.3% NAV return with about a 14.5% yield. Next on the list is XYLG. This one has an asterisk, like I explain every time, because they made a special dividend. It's making their dividend look higher than it really is. It's still a good fund, I guess. I mean, it has 4% NAV return, but its real yield's 6%. So it wouldn't really be ranked this high. So it's there with an asterisk. But it's been dropping. That thing was higher just last week. Anyway, TSLW. Now the Tesla ones have been hot lately because Tesla's been hot. So this one is from what's this one? This one's from Roundhill, of course. TSLW, of course. And this is actually one of the first W funds that came out. They have a W series fund that uses a little bit of leverage and swaps, and in any event, they're popular. A lot of people like them, and you can see why. Quarterly NAV return of 20%. Now, granted, a lot of that's because it's based on Tesla, but I mean, heck yeah, you combine that with a 34% yield. The only downside is, I'll slide over so you can see it, the volatility is at 54. It's one of the riskiest ones you can have, so it's going to, so proceed with caution, but it's doing well right now. Then we have PLTW. This is a stablemate and came out the same day that TSLW did. This one's based on Palantir, and this one's a monster. 12% quarterly NAV return. Wow, with a 60% yield. Then next we have iGold. Now the gold ones have been popular, so let's highlight the whole row so you guys can see it better. Quarterly NAV return of 8.5% with about a 16% yield. Super low volatility, steady eddy. 9.4 on the volatility. Less than SPY volatility, and of course, because it's gold, it's also a diversifier. The volatility doesn't tell you the whole picture, because gold also offers some diversification benefits versus SPY, because it's not because of the correlation benefits or the lack of correlation. Anyway, we'll talk about this some other time. All right, clip KLIP. Now this one, I guess, has benefited from the tariffs, but I mean, I've been saying that forever, so I don't know. It's just had a good year. NAV return of 5.3% with a 31% yield. It's been a good year to be a clip, and this one also has an ultra low volatility at 9.2. If that's important to you, if it isn't, that's fine also. But we have to have an objective way to measure the volatility. So, all right. Now let's look at the next one, which is from our friends over at Rex. Rex isn't really our friends. We need to have them on the channel sometime. That would be awesome. Maybe I need to ask them to be on the channel. But in any event, TS2. Now this is kind of a new series. This has been out since June. I think they brought these out to compete with the W, to try to compete with YieldMax and with the W series from Roundhill. And with Granite shares, to be fair. So, all right. TS2. It's been a good year, but like I said, there's Tesla and gold is kind of the theme so far. We've only had one other Tesla, but I think we'll probably have a few more. Been a heck of a week for Tesla. All right. Number 8 is SLVO, kind of continuing with the gold and silver, theme. Now, I heard a rumor. I was watching one of Income Architect's videos, and he was saying that the Curve, he couldn't really say it, but he was implying that the Curve Silver Fund, with probably KSLV, is coming out this coming week. That ought to be interesting to see, but in any event, we don't have that one out right now. So for now, the best silver fund, or the highest ranked silver fund we have, according to the MaxFactor, on a risk-adjusted reward basis, is SLVO. So SLVO is quarterly an average return of 14%. That's insane with an 18% yield. That's almost that perfect balance like I'm always talking about. And look, in a 14% vol. Maybe that's the new perfect fund is the perfect fund would be 100% yield, 100% NAV return, and a 1% vol. I mean, but that just doesn't exist. But you want vol as low as possible. And it would be great to have NAV return and yield balanced, but you at the same time you want them both to be high. So, so maybe a realistic balance might be 20-20, maybe 20-20 and 20 on all three numbers might be a realistic perfect fund. If you have like a NAV return of 20 quarterly, and it could do it a year in and year out with the volatility of 20. That probably wouldn't be enough for some people. Anyway, all right. The mythical perfectly balanced fund probably doesn't exist, but I think the MaxFactor does a good job at identifying the ones that are the most balanced. I hope you guys agree with me, and if you're watching, you obviously do. All right, next is Goop. Wow, look at Goop based on Google. Quarterly NAV return of 26%. Are you serious? It has a 21 vol. This is the fund right here. Look at this, 16% yield. 26% NAV return and 20. It's very, very balanced between all three components. All right. But like I say, in reality, you want 100 on both, and then you want, or more, and then 0 on volatility. You want the volatility of a bond. It doesn't exist. We'll find some ones that are close to it, though. There's some ones out here that are doing really well. TSLP, continuing with the Tesla theme. This is from our friends over at Curve. Howard was on the channel the other day. I hope you guys got a chance to see it. I think he was on Coach's channel 2 recently, or he's going to be on Coach's channel on Monday. I need to check it out. Anyway, all right. Well, but Howard's kind of making the rounds on the channels lately, so that's good to see. Curve deserves to be more popular, just based on performance. If it was only based on, especially based on NAV performance. All right. TSLP, based on Tesla, of course, 19% quarterly NAV return with a 40% yield. It's a 35 vol, though. But look at this. It has a 1-year total return of 35. All right. Who do you think is next? It's suspenseful. Look at this. Gooey. All right, there we have GUI with a quarterly NAV return of a ridiculous 17%. Look at the last 5 NAV returns, 24, 14, 26, 19, and 17. And that's just NAV. That doesn't include the yield. And then the yield on those was 30, 18, 16, 40. And the yield on GUI, which is the one we're talking about, is 36.15. They're a 24 volatility. All right, next is GDXY. Continuing with the gold theme. Now this is based on gold miners, and full disclosure, it's one of my bigger holdings, and man, I'm happy about that. I have done well. I have done really well on this one. Anyway, I didn't even really want it. I just got it to be diversified, and it's one of my better, and it's helping that. Full disclosure, also my portfolio was pulled back a little bit, like I think a lot of them did, because I have Alti, and the market pulled back a little bit the past week or all. But anyway, but not the past couple of days or whatever. I'm up 4.7% since inception. So I think the market's beating me by a little bit. But anyway, all right. But GDXY is probably half of that 4.7% that we're up. That's total return, including dividends. I'm just on drip, so the total return is just the net lick of the fund. Anyway, next is Babo. I did not have any Babo. Babo is 21%, or has a 21% quarterly NAV return, continuing with the double-digit theme, and a 56% yield. That's insane. That's insane. Tesla, continuing with the Tesla theme. This thing's insane. A 94 yield and a 14% NAV return. It's a 36 vol. I mean, this thing is absolutely insane. All right, and that's our number one because I should have done a better job. I thought that might have been two because I should have known better. All right, well that's number one, and I mean that's a good one to end on because my gosh, are you serious, Tesla? You know, are you serious? Now I'm going to sort this other sheet for long term. Well, if you want to look at the long term, we can really quick, but that's hard to beat. That's really hard to beat. We won't count down the long term. We'll just look at the long term, okay? But I thought it was kind of interesting today that blocks and I mean, you know, some of the ones fell off a little bit, but they'll be back hopefully. It's what I was trying to say earlier is with the Bitcoin pullback hurt my. I was up 7% or maybe even 8% because I don't check it every day. I was probably up 7 or 8%. I lost about half of what I was up in the most recent pullback, and I think that some other people, some of you guys may have also, if you're invested in some of these same funds. But I would have lost more if it wasn't for GDXY. And I have some ones in there, they're diversifiers that have done better than others. So anyway. All right, so this one right here, it's weird the way it sorts them, but Tesla's number one. Now so long term has to have been around for a year. Okay, and TSLP is number two. So in that, that makes total sense. We've already talked about Tesla, 94% yield. That's insane. That's insane. I've always talked about the difference between curve and yield max, and you can see it perfectly here because TSLP is on the line below. Look at TSLP's yield. It's about half, right? A little bit less, whatever. That's the difference between a monthly option and a weekly option. And when you go from weeklies to dailies, you about double the yield again, or the potential for yield. So if Tesla had daily options, and they don't, but I'm just saying it would yield 150 or whatever. Weeklies, depending on IV, weeklies are yielding 40 right now. Monthlies are yielding 40, weeklies are yielding 90, and it would be 140 or something if they had dailies. And the reason we know that is because they have benchmarks going back. The CBOE keeps benchmarks of weeklies and weekly options, quarterly options, and monthly options, and I've done a study on it before. All right. So, but look at this, Snowy. We didn't talk about Snowy on the other one. Snowy's number 3, Goop's number 4. But it's been a great quarter for some of these funds. Look, even on the long-term MaxFactor, Snowy hasn't had a bad quarter. That's why we haven't talked about it yet. But these other ones, Goop, GDXY, are the smallest one, and Tesla and TSLP, the lowest one is up 14%. That's crazy. So, but then when we get down on the long-term MaxFactor, because it's not just about what have you done for me lately, it's also what have you done for me overall, and it's hard to ignore YBTC. It's down 7% on the quarter, 6.88. You can see over there in column H, but my gosh, it's look at this, 50, or look next to the vol. It's a 26 vol, but it's a 56% or 54% total return. That's great. Then we have Misty. Misty's kind of, Misty's had issues lately. I think Misty was number 1 on this long-term list just last week. In fact, I'm pretty sure maybe it was 2 weeks now. But the only thing that's changed, or this negative 39 is hurting the, because the long-term MaxFactor factors in the quarter and the year. Now it still had a good year. It's a 66%. 52 vol and a 66% yearly return. But anyway, then we have Babo, SLVO, Maxi, GUI, TSMY. We saw a lot of these and already talked about a lot of these on the other one. OARC is kind of a stealth, cool little idea. Look at this. I guess the NAV is flat. It was at 880, now it's at 890. So the NAV's up 1% on the quarter, but it's paying a 51% yield. And last year it made a 29% total return with the 26 vol. That's pretty good, right? Anyway, then we have YBID, NVDY, NFLY, Coney, iGold. Okay, so now let's look at some fan favorites. So what about Alti? Let's see where Alti is on the list. Let's go down until we see Alti. Also, there's KQQQ. There's Cornerstone. I know a lot of people like Cornerstone, me included. YMAX. Okay, there's Alti. Alti and YMAX are right there together. Alti's just had a kind of a rough quarter down here. Let me light it up so you guys can see it. The most recent pullback, I mean, it put the hurt to Alti's NAV. Plus, oh gosh, did I really erase that? Anyway, my computer's running weird. Just ignore that. I don't know what happened there. I guess I could hit back. Hang on. Just in case I erased a line, I didn't want to. All right, so let me go back to that. I didn't want to. Where was Alti? Where were you, Alti? Okay, it was down here, right? Cornerstone. There it is. Okay, Alti. I'll light up the line. Okay. Yeah, 13%, negative 13 for NAV return. It's had a little issue with the NAV. I mean, this quarter. 18% total return for the past year with the low vol. Although the vol's been increasing. The vol was like 14, then it was 17, and now it's 18. And the price is pulling back, so that's usually kind of to be expected. But still, you know, on a relative basis, it's lower than some of these other ones. And look at YMAX. YMAX is I love YMAX because YMAX just buys the whole index. Anything that's in YieldMax, you know, YieldMax is turning into its own index. So when you do that, just indiscriminately buy the whole index, you get a 15 vol. Now, Alti isn't constrained to just the YieldMax funds. They can buy any fund or, you know, sell options on any fund. So they choose some funds that have more volatility. So that would make sense if you look over here at the you know, YMAX is a 15 vol and Alti's an 18 vol, but they're still relatively lower, you know, on the lower end of vol. Now, YMAX hasn't done as bad this quarter as Alti has. YMAX is only down 8% this quarter, but YMAX only pays about half. It only has about half the trailing 12 month. So anyway, look, two steady eddies next to each other. Well, I mean, I guess you could call it, you wouldn't really call Alti a steady eddy, but YMAX, I don't know if you'd really call it a steady eddy. Triple QI, you would, for sure, and it has a 10 vol. But look at the yield. You know, you pay for the steadiness. The yield is only 13%. I'm not ragging on triple QI, but yeah, the vol's at 10. Anyway, quarterly NAV return's good though. At least the NAV's up this quarter for this one at 3%, about a 20% yearly return. But you throw that all into the same bucket, and you take the risk, you know, and you factor it out. They're in similar shape. So let me see. Alti, it says line 77, but we started on line 51. So what is that? 26 or something? So Alti's 26, something like that. Anyway. All right, guys. So now, for those of you guys that have stuck around this long, we have some bonus content. We're gonna pull up the M squared if we can do it fast. I should have never done this. Okay. So there's that now. You guys can't see what I'm doing, and that's good because this is a proprietary code I'm putting in here, and I don't want anyone to see us. No, we're going to look at the Max's Moxie rating really fast. I think I've told you guys what it is, but let's just compute Max's Moxie really fast. We'll do a little autofill, and then I'm going to sort. All right, I think I autofilled it. No, come on. No, gosh darn it. Appreciate your patience. This is bonus content. I love I love the Max's Moxie rating. This should have been the MaxFactor. This is more what I was imagining. I wanted, well, the MaxFactor's kind of evolved. Once I saw that people were trading these, I realized the MaxFactor needed to factor in momentum and trend and that kind of stuff. But Max's Moxie ranking is more of what I envision for the MaxFactor type metric initially. It's still risk-adjusted reward. He just measures it in a different way. But yeah, that's all the MaxFactor is. Just for those of you guys that are new, I'm just measuring risk-adjusted reward. And just like I'm trying to do the same thing Morningstar does when they rank at 4 or 5 star. I mean, they look at several things, but one of the things they look at is risk-adjusted reward. I'm not saying I do it as well as Morningstar, but I mean, okay, for some reason, XBTY has an error here, and I fixed this last night numerous times. I don't know why. I'm not going to fix it right now. It knocks it down to 8th place on Max's Moxie ranking, so it's still good, but Alti's actually number 1 on Max's Moxie ranking, and look at Maxie. It's an 18 ball, and so you have about 18 worth of risk, but how much reward do you have? And it's not really that simple because the yield's not total return. So this is looking at how much yield reward you have, even though that's not really the whole picture. But anyway, so Alti has the most potential to get the highest yield in comparison with the risk that you're putting on. Like I say, with the caveat that yield's not the only thing, but that's just what the Moxie ranking's measuring. So number two is weak. It only pays a 4% yield, but it has like no volatility. So I mean, the math works out. I mean, it's very low, Anyway, but it really doesn't qualify to be on here because it doesn't pay high enough. So I really need to take it off. It probably won't be on there next week. Next time there's a new fund issued that as soon as the fund turns 3 months old, I'll put it on here. I'll put it in a week's place. If there's anything that's not on here that's 3 months old that pays at least 6%, let me know in the comments. I'll put it on here. It doesn't have to be covered calls. We have a few closed-end funds and that kind of stuff. It could be whatever. It just has to pay it, but it has to pay it monthly. And we aren't really looking at it, or at least quarterly. It has to pay some type of yield, and it has to be like high yield, more than 6. Anyway, USOY has a lot of potential. I mean, it has, it's 107% yield. Now, in the 1 year total return's only 14%, but USOY is a tough fund to beat considering it's only a 16 ball. You guys can't see that, but the 1 year total return of USOY is 14%. Anyway, like I say, this is bonus content. You guys probably aren't that as interested in this kind of stuff I am. But these other ones are funds that if the market's good, these funds will be also. All right, WDTE. That's from our friends over there at Defiance. 41% yield, pretty low vol, triple QI. Look at this, TSYY. Now, TSYY, well anyway, 182% yield. This one they sell options on, it's from Granite Shares, they sell options on leveraged. I think it's on TSL. I think they write put spreads on TSL, in the money put spreads too, or lots of times they'll sell an in the money put, so they have an upside capture component. It's these guys are doing a good job. I think they changed. They used to sell out of the money puts, but anyway, they do a good job. And then we have IWMY, Fiat. I mean, Fiat's an inverse, so of course it has a high yield. So that's a kind of a weakness in the Max's Moxie ranking. Max's Moxie ranking it's a quantitative rating, not a qualitative. It's not saying Fiat's the best quality, but quantity, yield over reward, yield over risk. Anyway, GLDY is a good one, I think. Well, not really. Or, it's had kind of a rough time. HYGW has potential, though. I should call it Max's potential. Or, it's a potential energy. Whatever. I need to brand. It needs work on the branding. Anyway, Max and rounding out Misty. I mean, look at this. Misty paying a 200% yield. Now, granted, it has a 52 vol, but that's why it's like number 14 and not number 1, like Alti. You know, Alti's the full package. Don't only pay an 18 vol. Look at Alti and Misty compared to each other. They pay the similar yield. Misty pays higher, okay, but just saying, if they did pay the same yield, Alti would be a better deal for no other reason, just because of the low volatility. Anyway, all right, guys. Well, that is it for the MaxFactor. I appreciate you guys for being here. I'm going to upload this video. It's 10:34 in the morning. I'm going to upload this video. Then I'm going to go watch football. I hope you guys have a great day. I'll talk to you later.